In today's show, I'll be sharing the latest technical analysis as Bitcoin teases a breakout as FOMO liquidity grab keeps 69,000 in place. And quoting the high priest of Bitcoin, Max Keiser, Bitcoin draws the worst people out into the open. The ECB, the IMF, the World Bank, for example, are vile extremists bent on institutionalizing debt slavery and plutocracy. Bitcoin financially euthanizes these monsters. Preach. We'll also be discussing Bitcoin ETF liquidity set to surge after SEC options approval, according to QCP, as well as fake Coinbase website leads to a $20 million fraud along with a 5-year sentence. Also, BlackRock eyes Biddle for derivatives collateral in crypto exchanges. We'll also be discussing Max Keiser predicts Bitcoin's astronomical rise to 220,000 per Bitcoin very soon amid Bitcoin's intensifying bullish momentum. We'll also be discussing Real Vision's crypto analyst says one catalyst can trigger Bitcoin explosion above 500,000 per coin. Also, Plan B doubling down on his $500,000 Bitcoin price prediction. All this plus so much more in today's show. If you're new to the channel, important to smash the likes, then go ahead and subscribe. Half the audience is not subscribed. What's going on? Then hit the bell icon, turn on all notifications to receive daily premium crypto news alerts every single day, including Sat Stack and Saturdays, just like this. Today is pod episode 1792. I'm your host, JV. It's October 19th, 2024. Market pulled back a bit after capturing 69,000 just yesterday, as you can see on Coin360. Bitcoin down 0.3% for the day, but maintaining above 68,400. I personally feel we're about to re-enter price discovery here sometime in October, less than 2 weeks to play it out. And then we have the election November 5th right around the corner. And checking out CoinMarketCap.com, the crypto market cap sits at $2.34 trillion. The Bitcoin market cap is $1.348 trillion. And we have roughly 43 billion worth of volume in the past 24 hours, with the Bitcoin dominance at 57.6% and the Ether dominance at 13.6%. And checking out top 100 crypto gainers of the past 24 hours, we got AXL up 11%, AXS up 9%, Pendle up 8%, and Helium up 3.5%. Let me know which alts, if any, you're bullish on for the bull. And checking out the crypto bubble so we get a visual perspective on the day. Let's looky here. I'd say 60% in the red, 40% in the green. And zooming out on the monthly, 90% in the green, roughly 10% of the market in the red. And checking out the Crypto Greed and Fear Index, today we're 72 greed, yesterday 73, last week a 49 neutral, and last month a 49 neutral. And checking out the time chain calendar, we have 183,595 blocks yet to go into the next halving. In 2028, we're currently on block 866,405. Every 10 minutes approximately, we get a new block. TikTok next block around the clock. You already know. And how many Satoshis could you get for $1 US? This mofo hasn't updated yet, but I'm going to speculate roughly between 1,400 and 1,500, and spot on 1,465 stats per dollar at the current exchange. So there you go. Stack stats accordingly, and happy stat stacking Saturday. Flow, flow, flow. But yeah, let's dive right into today's technical analysis, aka astrology for the Nipsies and the broskies. And then we'll pull up some of the live charts. Welcome everyone just joining us here today. Headline here reads, Bitcoin teases a breakout as the FOMO liquidity grab keeps 69,000 in place. That's right. Here you're looking at the 1 hour chart. Bitcoin circled the key breakout October 19th after the FOMO liquidity grab ended in a rejection at 69 G's, baby. Trading view showed the Bitcoin price action constricting after the week's final Wall Street trading session. Bitcoin saw new 3-month highs the day prior, inches away from 69,000 on Bitstamp before giving up its spontaneous gains, but still maintaining. We're still above 68.4 at the time of the live stream, so don't get it twisted. Low volume plus the bear divs on the breakout still think we come back down and consolidate before moving higher. This seems like a FOMO liquidity grab before the real breakout. Now, CoinGlass showed thick liquidity walls building either side of the spot price, with ask keeping a lid on the Bitcoin price upside. Now, analyst Roman referred to the crunch area of interest for the market participants, 68.4, right where we're at right now. This corresponding to a breakout zone of significant importance since March's all-time high. Everyone is watching 68.4 to break the macro range. That's right. And continuing on the topic, we have Rec Capital acknowledging the bull still had work to do in order to cement the zone immediately above 68,000 as solid support. Quoting the analyst here, Bitcoin is once again pressing beyond the very top of the resistance area. Bitcoin just needs one daily close beyond the red resistance to position itself for a confirmed breakout from here. Daily close is essential to confirm lack of upside wicks beyond resistance. Now, the October 18 daily close ultimately came in marginally above 68.4, ironically where we're at right now, making it Bitcoin's highest since June 10th. And turning to the macroeconomic trends, QCP Capital had good news for the Bitcoin bulls going forward. Strong institutional inflows as well as a 3.5-year high and a Bitcoin crypto market cap dominance meant that the so-called layer 1 coins should all benefit. It argued in the latest bulletin on Telegram to their subs, Bitcoin dominance stood at 58.8%, having briefly tagged 59% on October 17th. Again, the highest it has been in several years. So at U.S. equities, close to all-time highs, and the Japanese yen on a fresh weakening trend. Risk-on sentiment will only grow stronger as we approach the U.S. election. November 5th, less than, what do we got, 2.5 weeks out. This will propel risk assets higher and support the October narrative. So we're just getting into the high swing of things here in October before we hit election month for November, before we enter the Santa rally of December. How do you like that? Historically, Q4, year of the halving, is like an 88% parabolic uptrend. So if we're to go 88% from here, you run the math, almost a double the current price action, which would take us above and beyond that six-figure milestone family. But anyways, in other news, this is actually a big deal. Tor de Meester pointed out that this new paper is a true declaration of war. The ECB, European Central Bank, claims that early Bitcoin adopters steal economic value from the latecomers. I strongly believe authorities will use this Luddite argument to enact harsh taxes or bans. And then he goes on to break it all down, and this got a lot of controversy and a lot of people responding. Max wrote, Bitcoin draws the worst people out into the open. The ECB, the IMF, the World Bank, for example, are vile extremists bent on institutionalized debt slavery and plutocracy. Bitcoin financially euthanizes these monsters. Damn straight. All hail the high priest, and good thing for calling them out. Obviously, this is a war on Bitcoin. Clearly, you know what I mean? Now, let's check out some of the live charts. Here's the 1-hour chart, and then we'll work our way back and zoom out from here. Again, welcome everyone just joining the live stream. There's live and in the flesh, live chart action via TradingView, via Coinbase. So the 1-hour chart shows you right here. No particular targets, but we're maintaining on Coinbase just above $68,200 at the time of the live stream. Zooming out on the 4-hour, we do have a blue target sitting above 81,000, and we do have a bear target in the green sitting just shy of $49,000, and currently in the middle of that, and there is a rising wedge formation here in the 4-hour chart, as you can see on your screen. And zooming out and check out the 1 day, we also have a very clear rising wedge formation. Look how many green bullish daily candle closes we've had in the past week. 1, 2, 3, 4, 5, 6, 7, 8, 9. Out of the last most recent 9 daily candle closes, it looks like 6 of them extremely nice and in the green with very small corrective reds in between here and there. And we do have some bottom targets, should be on your radar, just shy of $49,000. And zooming out from the daily, that leads us to the weekly chart, where we have that cup and handle sexy target sitting at 124,000, which I believe is in play here sometime for Q4. If we can hit that target, that'd be pretty lit. And zooming out on the monthly, you can see we've had 7 sideways trading action monthly candle closes. Prior to that, we had a nice run up for roughly 7 months. So let's continue that bullish momentum here in Q4 for October. But let me know where you feel the price action will likely take us next. Let's discuss these ETF options. Headline here reads, Bitcoin ETF liquidity set to surge after the SEC options approval. That's right. Spot ETFs could see a significant liquidity boost after the latest approval of the US SEC. October 18th, the US SEC apps from the New York Stock Exchange, as well as the CBOE, to list the long-anticipated options for the spot Bitcoin ETFs. This will make options trading available for the 11 approved Bitcoin ETF providers. The approval could significantly bolster the Bitcoin ETF inflows, according to QCP Capital, which wrote the following on their research note. The consistent inflows into the ETF highlight that the institutional demand remains strong. With this morning's approval by the SEC's approval for the Bitcoin ETF options to be listed on the NYSE, we believe this will provide the ETF with the needed liquidity to attract sustainable inflows. That's right. Continued ETF inflows could help Bitcoin's price reach a new all-time high. New all-time highs in play. ETFs accounted for 75% roughly of the new investment into the crypto by February 15th as it surpassed the 50,000 mark. Yeah, that's right. I believe it was February 12th, and I remember that because it was the day after my birthday, and all I wanted for my birthday was a $50,000 biddy. And lo and behold, the following morning, we smashed it. Yes, that's right. And we got to capture that here on the pod. So the upcoming 2024 U.S. presidential election could significantly improve investor appetite for the risk-on assets, such as the Biddy and other cryptos. This will help risk-on assets stage a rally leading up to the election, according to QCP, who shared here with U.S. equities close to the all-time highs and the Japanese yen on a fresh weakening trend. Risk-on sentiment will only grow stronger as we approach the U.S. election. This will propel risk assets higher and support our October narrative. Market participants are preparing for the U.S. election date, November 5th, which will occur in less than 3 weeks. We have former President Trump's poly-market odds of winning the presidential election skyrocketing to a record high of 60.2%. Take that, camel toe. And to confirm the potential breakout from the current crab walk, the Bitcoin price needs to close the week above 68.7. So that's the line in the sand right now, according to Red Capital, is what they shared here, on the cusp of confirming a breakout beyond the multi-month channel top resistance. A weekly close just like this would be bullish. Now, the potential breakout could be supported by this week's positive ETF inflows. Bitcoin ETFs surpassed the record 20 billion milestone for the total net flows on October 17th. That was 2 days ago, right? Yes, and within 10 months from launch, they officially didn't go live till January 11th. And in contrast, it took gold-based ETFs nearly 5 years to cross the same 20 billion milestone. So ultimately, Bitcoin just achieved in 10 months what it took gold to achieve in frickin' 5 years with the ETF inflows. Now, on other news, gold just broke out and hit a new all-time high as well. You know, Peter Schiff must be celebrating on X, I'm sure, as he always does, and probably trying to throw Bitcoiners under the bus like, you need to capitulate, gold's at an all-time high, you're missing out. But we know how the Peter Schiffmeister does. Next headlines, yo, reads, fake Coinbase website leads to $20 million fraud in a 5-year sentence. This is probably one of the most common schemes in crypto. It's called phishing, PHISHING, something like that, phishing scam. I'm sure you've heard of it before. But the scammer sets up a fake website that looks like a legitimate exchange, and then they get your login info because you put it into their fake site, and then you get hacked. And this is very sad. I know people personally in the flesh who have lost as much as 2 Bitcoins, now valued at $120,000, thinking they're speaking with real support. So I want to cover this because I don't want any of my audience to get scammed. And a quick shout out to P. Hatter. Welcome to the Hodl Gang. For those that don't know, you can become a member of the YouTube channel for less than 10 cents a day. I think it's $2.97 a month. It'll help support us, and you can become a member of the Hodl Gang and all that fun stuff. So thank you, P. Hatter. You're going to notice your name turn green, and you have a badge, which is a loyalty badge, right next to your name. So let's freaking go. But yeah, let's continue here, yo. Be very careful. Indian citizen Tomar has been sentenced to 5 years in prison for defrauding Coinbase users with websites that spoofed the crypto exchange. The U.S. Attorney Office for the Western District of North Carolina announced Tomar pleaded guilty to wire fraud conspiracy in May. Tomar and co-conspirators created a website imitating the Coinbase Pro site and used it to steal users' login credentials and authentication info. In some cases, users were referred to fake customer service representatives who convinced the victims to allow them remote access to their computers. Yeah, so the person I know that got screwed over, they basically went to Google, they typed in the name of the exchange and then support, and then a fake phone support number came up to the exchange. It ended up being a hacker. They got remote access to the computer, and they ultimately stole all of their cryptocurrency. So the result in either case was the loss of crypto in the victim's Coinbase accounts. In one incident, the victim, located in North Carolina, lost $240,000. Tomar was active as early as June 2021 and was arrested in December. That's two years of scheming. His scheme raked in more than $20 million from hundreds of victims worldwide. According to the Department of Justice, that stated the following: Tomar used his victims' funds to pay for his lavish lifestyle, including to purchase, I don't even know what the hell this is, Audemars Piguet and other expensive watches, to buy, an AP, I gotcha, to buy luxury vehicles like Lambos and Porsches, and to make trips to Dubai, Thailand, and elsewhere. The Justice Department originally estimated losses of Tomar's activities at $37 million. He faced a maximum sentence of 20 years imprisonment and a $250,000 fine. These identities and fates of Tomar's co-conspirators were not disclosed. The Coinbase Pro site was eventually closed and its functions integrated into the main Coinbase site. The crypto space offers bad actors ample opportunities for crime. Although there are risks unique to crypto, many times old and familiar scams are equally fruitful. In September, fraudsters posing to be a member of the exchange Gemini customer support team. So yeah, this is just very common. Like I said, I know people in real life, unfortunately, who have become victims of this, and all it is people go to the wrong site. They think it's a real site. They put in all their personal info thinking it's a real site. Now the hacker has all your information and they pretend to be customer support. Typically, these big exchanges don't even have phone support. So that should be the first red flag. You know what I mean? So if you're looking on Google, exchange phone support, I need to talk to somebody, you're most likely going to get a hacker pretending to be phone support, and it'll probably end up being some representative from India, you know what I mean? And he's going to ask you to plug in your wallet and to give remote access, and then he's going to steal everything out of your hard wallet, and then he's going to steal everything off your exchange, and it's very sad, and it doesn't matter what the exchange is. It could be any exchange. I recognize the same scam on every exchange. Every exchange, there's some scammer pretending with a fake website looking to do this phishing scam. So be very careful out there, family. It's very sad, but this is the reality. Never give remote access to your computer for any reason. Agreed. Very bad idea, family. Very bad idea. And the reason people, especially like elderly people who are taken advantage of, they don't know any better because, number one, they don't realize phone support for crypto doesn't exist. They don't realize they're talking to fake support. And number three, they put their trust, unfortunately, into the support. And then once you put your trust into the hacker, they're relentless. They'll take everything from you, your whole life savings, whether it's $500 or $50,000 or $500,000, they will take everything from you, right? Literally everything. So be very careful out there, yo. But yeah, let's continue with the headlines. Here's the latest with the BlackRock eyeing the BUIDL. Do I pronounce that Bildel? For derivative collateral in the crypto exchanges. Asset manager BlackRock reportedly pushing its money market digital token to be used as collateral in crypto derivatives trading. According to the 18th October Bloomberg report, the company is in talks to integrate the BlackRock USD Institutional Digital Liquidity Fund, BUIDL. I'm just going to refer to it as BIDL. Token with the trading systems of major crypto exchanges such as Binance, OKX, and Deribit. Brokerage firm Securitize is reportedly a partner in the initiative. The move would expand Builds used as collateral, widening the competition with the stables that are largely used as collateral for crypto derivatives trading, such as Tether's USDT. Now, CC data revealed that derivatives accounted for over 70% of the total crypto trading volume in September. But with about $3 trillion in crypto derivative contracts traded on centralized exchanges, derivatives are financial contracts that derive their value from another asset, like stocks or cryptocurrencies. And quoting Warren Buffett, derivatives are financial weapons of mass destruction. Traders use derivatives to bet on an asset price change or protect from losing the money. And while the collateral is used as security for the trades, like a deposit to ensure losses can be covered, Buildle is already accepted by collateral by FalconX and Hidden Road, two of the largest crypto brokers. The token has a minimum investment of $5 million and is available only for qualified institutional investors. And according to data from Security Token Market, Buildle's market cap stood at $547 million as of yesterday, October 18th, making it one of the biggest use cases for asset tokenization on the blockchain. The fund primarily invests in U.S. treasuries, cash, and other liquid assets. We got the Bank of New York behind the interoperability of transactions between the digital and traditional markets. October 3rd, the subcommittee of the CFTC voted in favor or recommended the proposal allowing digital assets to be used as collateral for commodities and derivatives trading. The decision could receive final approval before the end of the year, marking a notable milestone in the integration of traditional and crypto markets. The move would allow the brokers to use the tokens, such as BUIDL, stablecoins, and other crypto to use in traditional markets via the embedded systems. And speaking of Bloomberg, Deribit CEO Luke said the platform is reviewing a number of the token as collateral, including BUIDL. Now, Franklin Templeton's on-chain U.S. government fund is another popular tokenized money market fund backed by the Wall Street. And according to the Dune Analytics, the market cap of tokenized securities is $1.7 billion at this time. Next story of the day, yo. Headline reads, Max Keiser predicts Bitcoin's astronomical rise to $220,000 very soon amid the Bitcoin intensifying bullish momentum. Check it. Max shared an extremely optimistic outlook for the bitty near-term trajectory in a recent post. The prominent Bitcoin pro-pounder, wow, I love that name, pro-pounder, predicted the Bitcoin price is headed to the ambitious $220,000 level. Let me know if you agree or disagree with the high priest of the bitty. Keiser's prediction comes as Bitcoin made yet another attempt on Friday to establish a strong foothold above 68, coming just shy of 69 Gs. Bitcoin is wowing the crypto community by surging above 68, which we're currently above. But a prominent Bitcoin advocate is anticipating much larger potential gains. That's right. Max noted Bitcoin could easily climb to the new lifetime high, all-time high of 220 Gs because of one chief reason. Another safe haven asset by the name of gold set a new historic high of today, over $2,700 per ounce. So Bitcoin put in a record high of 73.8-ish back in mid-March. Bitcoin presently trading 68,400 at the time of the live, while the premier crypto is up 17% from the October lows. And seems poised to re-challenge that 70,000 mark, or right on the cusp. It only remains 6.8% below the current all-time high, and we've seen Bitcoin gain a 10%, in a single daily close, so anything is possible. Gold recorded the previous lifetime high back in 2020 during the pandemic when investors turned to the yellow metal to hedge against the government's quantitative easing spree. Meanwhile, Max argues that now that gold has recorded the new high, it is not absurd to expect Bitcoin to follow in gold's path in the near term. The pundit is convinced Bitcoin will swiftly, and we ain't talking about Taylor Swift here, hit 220,000, which he has been forecasting for years. I've been covering it on the stream, for Christ's sake, for years. But anyways, he recently tweeted, the new all-time high gold price is predicting Bitcoin will trade over $220,000 very soon here, fam. And apart from Max, other well-known names are firmly in favor of the sharp price rise of the bitty. We have the BitMEX co-founder Arthur Hayes Just Blaze, for instance, recently argued that the U.S. government financial response to the war in the Middle East would prompt the money printer go burr, spurring the next Bitcoin bull run. Quoting just Blaze right here, we know that war is inflationary. We understand that the U.S. government must borrow the money to sell the bombs to Israel. He postulated, we know the Fed and the U.S. commercial banking system will buy this debt by printing the money and growing their balance sheet. Therefore, we know the biddy will rise stupendously in fiat terms as the war intensifies. Let me know if you agree or disagree. Hayes stressed that global clashes, especially those involving the United States of America, often result in the monetary expansion. He proposes that with more dollars flowing into the economy via government debt, Bitcoin, the decentralized asset, the king of all crypto, is primed to benefit as investors seek refuge from inflation. And although the geopolitical backdrop remains uncertain, Hayes claims that Bitcoin will flourish. He urged traders to avoid emotional judgments linked to political developments. The best thing to do is get yourself and your family out of the harm's way, and then shepherd your capital into a vehicle that outperforms the fiat debasement and maintains its energy purchasing power. Hence, buy the biddy or forever hold your peace. Let me know if you agree or disagree with just Blaze Arthur Hayes and 220 G's from the Max Keiser. Now for our feature story of the day. Real Vision crypto analyst Jamie Couch says one catalyst can trigger Bitcoin explosion above 500,000 per coin. And to back it up, we have another chart suggesting a $500,000 Bitcoin price as well. So let's kick it with this recent tweet from Plan B, creator of the Bitcoin stock to flow model, sharing here. I like and use power law in time since Trololo in 2014, but $200,000 end of 2025 and back below 100,000 end 2026 is too low, in my opinion. Stock to flow power law predicts $500,000 average in 2024 to 2028 halving period, with 250,000 to a million standard deviation range. Even $250,000 average is higher than the time power law. Interesting times ahead. So that's right. The power law is projecting $500,000 biddy after 2024, where we're currently at, into the next halving of 2028. Send it. He also recently tweeted, I stick to my 2019 prediction. And here's the 2019 receipts. June 16, 2019, he posted, after the next halving in 2020, Bitcoin stock to flow will be 50 plus and market value of 1 trillion plus. And after the 2024 halving, stock to flow will be 100,000 plus with a market value of 10 trillion plus, which he ultimately doubles down on right here with a little update. Here you go. 10 trillion plus market cap between 2024 and 2028 with a $500,000 Bitcoin price action Jackson. And he also recently tweeted, this 2014 tweet with Trollo's 2014 power law model triggered my interest in the Bitcoin price prediction at the time. My idea was to add a third variable as color overlay. I started on Twitter with the color chart. Stock to flow then came later. And here's the throwback, more receipts, December 19 of 2014. Bitcoin price prediction chart, or why some predict a $1 million Bitcoin price. Shout out toward the Meester. And you can see right here, logarithmic nonlinear regression chart, the line in the red taking us to a milli. And then we have the daily weighted price. Great metrics here. All this still in play. And let's dive a little deeper here. Another model showing us $500,000 Bitcoin price. Quoting Jamie Couch from Real Vision. Every time a money manager chooses the biddy over the sovereign debt, it reinforces the existing debasement trend. A slight shift towards Bitcoin can drive the price above $500,000 per coin before the decade ends. Extremely conservative, in my opinion. We hit 500 G's this cycle. Very doable. No guarantee, not investment advice. Everything I share in this stream is for entertainment purposes only. Couch believes that the Bitcoin relatively strong performance during the bear market and its store value properties may result in more investment portfolios. Of course, adding exposure to the greatest asset to ever exist in mankind, the BTC. Key takeaways from the previous thread on asset allocation from 18 months ago. Here are the highlights. Number one, during the last bear market, Bitcoin outperformed the other asset classes, indicating that even the managers are not adequately compensated for holding bonds, commodities, or even some of the equities. Number two, the shift away from the bonds is inevitable, despite government mandates for bond purchases or new banking regulations. And trace. Techniques for adding the Bitcoin to the portfolios for the massive sovereigns remain viable, even amid liquidity constraints. And he has said that Bitcoin can start attracting a percentage of the funds that traditionally are allocated to the government bonds as investors pursue better returns amid the fiat currency debasement. Quoting him here, debasement is the real problem for the portfolio managers. In the relatively short period since 2018, Bitcoin and U.S. technology stocks have been the only assets serving as effective hedges against massive increases in the monetary base. Traditional allocators will inevitably begin to weigh up the possibility that a non-sovereign bearer asset with no counterparty risk could be an alternative to bonds issued by prolificate governments. And in April of 2023, he estimated if only 1% of the global bond market value moved into the Bitcoin, the network's market cap would rise north of $3 trillion, practically 3x where we're at, equating to a price of around $180,000 Bitcoin in play. But there you go, yo. Let me know if you agree, disagree. 500 G's, baby. We got two metrics pointing right at $500,000 Bitcoin price. Let me know when you feel that season will occur. Will it be this season? Will it be Q4? Will it be Q1 of next year? Will it be the price cycle peak of next year? Holla. And here we go. Welcome to the Q&A segment of the live stream. We got close to 1,100 people here. We're still live on X, Rumble, and YouTube. We're kicking it. I'm going to be reading as many of your comments out loud as I can, and then we'll be switching to the uncensored extended version of the pod.